Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. All right, we got USMJ now on tap, and we're looking at Kira to start it off. And Kira was in a consolidation day. Again, no red flags on volume, still declining, but a quadruple top of resistance. Even though we got the all-time high yesterday, it was by less than 1%. And these four tops are similar to CGC hitting its tops and seeing resistance. That being said, Kira had a much weaker day than CGC did today as we closed down near the low. So we have changed the 4-hour trend, or I should say we have lost the 4-hour uptrend. We kept higher lows and higher highs, but we have now lost the higher low pattern. In order to confirm that we are now in a 4-hour downtrend, we will have to see a bounce attempt to form a lower high compared to the all-time high and then drop to a lower low. If that does not happen, the potential of a daily bull flag is still there. So we have to see bearish follow through. Otherwise, a bear break with a lack of follow through means zoom out and look for the potential of a flag. So I was talking about making a re-entry in CURA. I had sold a position. I meant to re-enter yesterday, was distracted, did not get a chance to do so. And now I'm looking to re-enter that position again, 5+% cheaper than where I sold it at, if I get a setup that I like. We are not close to oversold on the hourly. We are oversold on the 15-minute. So if we were to start weak first thing tomorrow and see a bear break of 1408 and flush below 14 psychological, I'll probably look to re-enter that half position, and I may just treat it short term. I may just make an entry and then look for an hourly bounce. And if I were to see, 3% profit that day, I'd probably lock that in. But that's just, I'm going to be playing that position on the fly. I still have my smaller core position now as I scaled out and sold on the way up. So now that if we have some consolidation, I am looking to potentially re-enter that position. Depends on how tomorrow goes. IAN, so no red flags here either. Again, volume, not standing out at all. Look at the bear volume the last time down. Look at the bear volume this time down. Not even comparable. So looking at the daily chart, in order to change this trend, we have our low, we have the high of the bounce where we topped out, and now we're looking for a higher low to form. There's a gap to fill at 663 that has not filled yet by 1 penny. We got to 665 today. So we're watching that potential gap fill. Again, I sold, and this is why we scale out against the trend. I entered IAN because of daily oversold conditions, knowing I'm playing counter the trend, and I scaled out a position here, and I scaled out a position here. And the reason I scaled out into strength is because I know that to change the daily trend, a higher low and higher high is needed. To think that we're just going to see a V-shaped recovery back up to $8 is not the likely scenario. So by scaling out into profit, I lower my break-even point for the rest of my position, and I have that cash available to scale in, looking for that daily higher low at cheaper prices. So looking at IAN on the hourly time frame, we did get a little bit of a trend change attempt at the end of the day. Nothing convincing going on there, and we have to see pretty much a bull break tomorrow first thing. If we can break the high of today, that'll be convincing our higher low has been set on the daily. So 685 is key resistance. But if we drop down and break the low of today, 665, I'm going to be looking for that hourly RSI to be dropping towards oversold, and that would make me very comfortable scaling in. So if we were to see red tomorrow, I would probably re-enter at least one of my positions that I did scale out of. But again, these are all things that depend on what's going on. What's the S&P 500 doing? What's CGC doing? How is CGC breaking its 4-hour equilibrium? These are all things that change on the fly and affect my in-the-moment decision. CL is a daily inside bar. If we break the inside bar bearish, we have to form a daily higher low. Support is 1707, and then I'm looking down at 1620. If we get a bull break over 1779, the all-time high is right there and the next level we're looking at. We can see the hourly consolidation is beginning to level off a little bit. The question is, can the bulls follow through with that to make it very convincing that's our new higher low and the bulls are heading back up towards $18. OH, so OH is the pattern. I believe I drew this yesterday, the broadening wedge pattern. And look at how this played out on the hourly today. So drew this yesterday, of course, before today's action. High of today rejected right under this line. Low of today, where we closed right above this line. And we can see how many hits we have. Pretty much 3 touches now of resistance, about a half dozen touches as support. So keeping an eye on this pattern. I'm not going to play based off of it, but it's a good visual to be watching. And on the daily time frame, with the close at the low of the day, we essentially have the bull move, the low of consolidation, the inability to see continuation, and it does look like this is going to be a tightening 4-hour pattern to be watching. So the range on the 4-hour is the high, low, lower high, and now we're looking for a higher low compared to 1175 to stay in a tightening 4-hour range. There's a lot of tightening 4-hour ranges out there. VFF is in one, CGC is in one, and some other names as well. Another point I want to mention that I talked about in the Canadian MJ video, have to be watching both tickers if you're trading any of these names. Watch the dual listed ticker as well. There's been a significant bull break on the dollar, the US dollar. The last 3 days, we've gone over 1%. That's a significant move, and that's affecting how these charts look. We can break resistance on the Canadian side of things and not break resistance on the US side of things because of this current discrepancy. And this is a bigger discrepancy than we've seen in quite some time. So again, the differences between what the Canadian ticker is doing compared to previous support and resistance levels and what the US level is doing are going to be very different. So Hexo hit an all-time high in Canada today, and it did not in the US. We have to ensure that if we're going to have full confidence, whether it's with a support or a resistance break, that both the Canadian and the US names are seeing those breaks because of that currency difference. So 4-hour equilibrium on OH on watch, have to form that higher low. GTII, big pullback today. Again, look at the big red candles. You cover up that volume, and you say, oh man, that's a pretty big pullback. And then you look at that volume and say, well, that's nothing. The volume is not scaring these bulls whatsoever, so we are going to anticipate higher lows on these daily timeframes as long as we don't see notable bear volume. So our low is down at 1862. Our high is up at 2175. We topped out at 2168. So this was a tightening 4-hour range that broke bearish. Actually, I take that back. We have not broken bearish yet. I'm looking at our high, low of the pullback of 1994, lower high with the inability to break resistance, and 1994 potentially in play tomorrow. So here's another one that could stay in a 4-hour tightening pattern if we can hold this support. And if we do, we're going to bounce and look to form a lower high compared to 2168. If that support level does break, we look for the daily higher low to form somewhere else, and that's going to start to be a red flag. If we break 1994, the size of the pullback will be pretty darn high. Don't forget this head and shoulders pattern that we're keeping an eye on. We would have to see a bear volume spike if we're going to drop down towards 1862 support and confirm this head and shoulders pattern, and we don't have that yet, but volume is going to be key. Volume is the proven indicator, and if the bears don't see big bear volume, they're not proving anything on this pullback. HARV has topped out now. After seeing 5 days in a row of higher lows every day, as soon as we broke 1325, we can say, okay, daily consolidation is underway. We have a double top by 1 penny and a break of the daily higher low pattern. We closed at the low of the day, and the next support level we're looking at is down at 1215. So if we were to get down towards oversold conditions on the hourly time frame, let's say tomorrow we drop down to the lower $12 range, hourly RSI starts getting oversold, that's when we start looking to potentially begin scaling in, trying to find that daily higher low under hourly oversold conditions. If this is a new trading style for you, paper trade it and practice it first. Scouting daily higher lows and using oversold RSI levels, whether on the 15-minute or hourly time frame, to let you know when to start scaling in, keeping in mind that you want to have multiple orders and distance between those orders so you're not trying to nail the bottom, because putting that expectation on ourselves as traders is too much. We're not going to nail bottoms and tops. We're going to get the meat of the moves. So scaling in oversold conditions is what I like to do when looking for higher lows. CWeb is coming up to a key support level. So here's another example with 2428 support. We're still in daily consolidation mode, and this is definitely a red flag. The red flag was yesterday with that bear volume spike, and that bear volume is keeping up today. What are our RSI levels? Hourly RSI is oversold. So I can say to myself, support is 2428 as a must-hold daily level. Right now, that support is more than 2% away. If we're going to drop down and touch that support tomorrow morning, that hourly RSI is going to be down in the teens. I am anticipating that the bulls will be able to hold that support initially, and it will be a potential catalyst for a short-term hourly oversold bounce. So if I'm going to make that play off of that daily support, I make my entry, and because it's so close, I don't need to scale in unless I want to maybe try and enter at 24.70 and 24.50 and then put my stop under 24.28. And then from there, the game plan is, if we do see the hourly oversold bounce start to play out, do you scale out into profit? Do you take partial profit and then drop your stop loss below that level for break even? Or do you wait and hope that the daily chart gets followed through? It all depends on what your trade game plan is before you ever enter. My style would be to scale out a partial position, lock in profit in the short-term hourly oversold bounce. That way, if we continue down after cooling off RSI levels, I'm pretty much going to get out with a break-even trade. And if I'm right, half of my position or whatever I leave is going to follow through with a nice little gain. Checking in on CVSI, certainly red flags at this point due to the lack of bull follow through. I have taken a small loss on this trade. I made a bull entry back 3 days ago, and that bull entry was based on hourly supports breaking and getting no follow through. We got great follow through on that bull move the day that I did enter, but we had to see the higher low and higher high follow through to see continuation here. And this is the kind of scenario that, because it was a swing trade, I enter with a smaller position, and if we saw that bull move and the proof of why I'm in this trade, I would have doubled my position on that resistance break. Because that did not happen, I kept a small position and was able to exit with less than half of a day loser of what my normal day trade position style is, or I should say position size. It's not game over for the CVSI bulls, but they just have not seen any follow through, and we're looking back down at 550 and 546 as supports. I'll be interested if the bulls can break 548, where we did recently top out. TRUL, increasing bear volume, definitely notable, but we have a lot of space before we lose our daily support. So this is a daily equilibrium we were watching with our high, low the pullback, lower high, and we're scouting a higher low compared to 1643. With where we stand right now, we are over 5% above that support level. The hourly RSI is oversold. It's right on 30. So I can very easily assume that we will likely hold that support on the initial test of it, because if we weren't going to do so, that hourly RSI would have to drop down into the teens and we'd have to see some extreme levels. So again, if we drop down tomorrow first thing and start to head towards 17, potentially scaling in for the hourly oversold bounce, and then what's your game plan? Are you going to scale out some profit if we do start to bounce and then put your stop below the temporary bottom, wherever that is? That all depends on your trade strategy. ZYNE continuation for the bulls. Hourly uptrend has remained intact, just reminding me every day that I should have chosen ZYNE as opposed to CVSI for that trade. Anything above 980 is a higher low on the hourly time frame. So the bulls have the hourly uptrend intact. When we lose the hourly uptrend, we're going to look for healthy daily consolidation. Anything above 760 is a higher low. Still very strong, closing up at the high. Resistance from here is 1040, make that 1051 and 1088. Very nice follow through, but bulls are tiring out. Look at the volume drop off. That is momentum. If that was increasing, that shows the bulls accelerating. If that is decreasing, it shows the bulls decelerating, and I would expect a temporary top and daily consolidation to happen in the near-term future, probably early next week, if not tomorrow. TILT is cooperating in terms of the most likely scenario, which was a lower high compared to 320. That lower high has now formed at 302, and we had a very clear profit-taking day. No major red flags on the volume. We did close at the low of the day. So again, look at the RSI levels. Hourly, not close to oversold. 15-minute is oversold. If we start weak first thing tomorrow and break 258, that 15-minute RSI is going to be down in the teens. I would expect a short-term bounce pretty quickly. The question is, can the bulls get enough momentum on that short-term 15-minute oversold bounce for us to start forming our daily higher low? If it just ends up being a 15-minute bear flag to cool off RSI levels and we see another leg down, then obviously that's not the case. And then the hourly RSI would be approaching oversold. So Tilt has earnings Tuesday after hours. That ruins the game plan for me, unfortunately. I was looking to scale into this trade, but when I found out that earnings were Tuesday after hours, that pretty much means that I anticipate we're going to form a daily higher low before Tuesday. We're going to stay in a tightening range, and then the earnings reaction is potentially going to dictate how we break this equilibrium. I don't play earnings. It's a complete gamble. I'm not here to gamble. Well, I am here to gamble, but I am here to gamble with the odds in my favor. And I know that I have no odds in my favor if I'm playing an earnings report where I have not done significant dozen-plus hours of due diligence as to the fundamentals, the comparisons to its peers, and all of that good stuff, which I have not done on Tilt. So I'm not going to kid myself and think I have an advantage when I don't. So I'm not going to play tilt, and I'm going to wait until there's a setup where the odds are in my favor. But we will still look for that daily high or low tomorrow or Monday. ACRG, little bit of a red flag today. We broke hourly resistance by 1 penny and rejected. So here's 22.65, 22.66, and then we faded back down. It is still a tightening range to be watching. Let's look at it on the 4-hour here, and I actually like it better on the hourly. 21.09 support, 22.65 resistance, higher low of 21.22. I don't have my magnet on. Let's try that again. So higher low at 21.22, double top, higher low again at 21.51. Anything under 22.62 or 22.66 is just a lower high. Watch this hourly, watch this hourly equilibrium. If it breaks bull, we're going to look for a daily lower high to form and an equilibrium potentially on the daily. If it breaks bear, we have a potential daily bear flag to drop to lower lows. How this hourly equilibrium breaks is very important in the short term for ACRG. BAMM. Big pullback today, confirming the bearish reversal gravestone doji from yesterday. We bounced right off the daily 12-period exponential support. That's why I like this moving average as a visual guide. And we bounced from oversold conditions on the 15-minute time frame, getting pretty extreme down there. When we were at the low of this candlestick, we were well into the teens on the 15-minute. And when we were at the low of this candlestick, the hourly RSI was in the low 30s. Hourly equilibrium on watch if the bulls can hold 250 tomorrow morning. Low, high of the bounce is 310. Looking for a higher low compared to 250. If the bulls change the hourly trend in their favor, our daily higher low is clearly established and the bulls will attempt to continue the daily uptrend. If we break the hourly equilibrium bearish, we are going to pull back down towards 230 as the next support. Nice volatility for trading today. Daily uptrend still intact. How this hourly breaks is going to be important for the short term. MedMen. Some people wondering why I'm not covering MedMen. MedMen has 3 support levels left, all within a 3% range of each other before the all-time lows. It's in a very clear weekly downtrend, a very clear daily downtrend. Management, fundamentally speaking, there's drama. I don't like drama. And I don't have any interest in a stock that is in downtrends on all time frames. That doesn't say opportunity to me. If we're looking bullish in a bullish sector, we want to be playing the bullish names. If MedMen can change the daily or weekly trend, I'll start being interested in it again. But other than that, we're looking down at all-time lows. So that's why I'm not covering MedMen. And I will again at some point, probably over the weekend. But other than that, if it wanted to make back on the daily videos, bulls have to prove that they deserve to be in these daily videos. I appreciate you watching. Do good things. We'll see you over the weekend.